Hey, here we are. This Jerome with Moneymaker. Just thought I'd try some live videos a little bit. So I was going to review a couple of trades that happened this week, the week of August the 7th, 2020. And I use Toss, Thinkorswim. This is their platform. And also in the background here, I have my track sheet of my trades that you see on my website, myspreadindicator.com. So we're going to talk about a couple of trades from this week because I've got the live charts up and we can look at them as we go. We'll start off this natty gas that it would have actually lost a little bit, and I'll show you why. This, again, here's what I want to do is show you and educate you how my trade indicator works. This was like last Friday. You can see my pointer. Friday was a good spot to get in, which was the 4th or whatever this says. Yeah, it was on the 4th. So we got in at about 2.5 on natural gas because over here it's hard to see now. This is the end of the week and you can see along the bottom. Here's Thursday, here's Friday, here's today. We're live. So anyway, over here that Friday we got a spread going. You can see it cross above white line. So we got in. Sure enough, and get this, it opens up Sunday evening and it just has a big gap right there. Well, obviously we got out immediately, but you can see you lost 5 points and it equates to about $500. Hey, that's trading. Again, there are simple rules with this trade indicator. And one of them is if it closes below the white line or below the lowest point, you get out. So we got out immediately, which is fine. And that's how that trade went. So that was quick. The next trade here, which was wheat, this week. We had two good trades. As you can see, wheat and 30-year bonds, they turned out very well. So let's review the wheat. Started on Monday, December 7th. And let me get my chart over there. We'll look at wheat. Oh, let me find it. It's over here somewhere. There we go. You can see here's Monday down at the bottom. There's Monday. Here's the wheat. Here's the chart up here. The symbol ZW, and then here's the time frame 1 hour chart. These lines, vertical lines here, are the days of the week. Futures open up at 5 o'clock in the afternoon Central Time. They close at 4 o'clock the next day Central Time. They're an hour break and then they reopen. So you can see this was a good looking trade. So sure enough, we jumped in it on Tuesday, got in right above this white line and whatever it was there, about 574. And basically didn't get below your lowest point. That's one of the more aggressive rules. A conservative rule is that if you get in above the white line and it closes below the white or the red, you would get out. Well, right there, if you're very conservative, you'd get out. And at times I've done that, and I can show you one of those. Most of the time I'm fairly aggressive, so I'm not getting out unless it gets about 5 ticks below the lowest low, the previous low down here, which is what happened back on natural gas. So anyway, on this one, you get in around 574, you let this thing go, and sure enough, it runs and runs and runs. And we got all the way up to, we could have got out initially at this tan line. This white line here is a trend line I had drawn earlier. But I'm going to show you what I did when you look, the 1 hour is an entry point. So I'm in at the 1 hour. Then we're going to go up here and flip to the 4 hour. The higher the time frame you have, the stronger the signal. So I'm going to go to the 4 hour. I usually use the 15-day. When I saw this, here's Tuesday, and that's still not bad. It had gotten in, you'd still be above the white line. But when we got in on Tuesday, as this turned up, I went, boy, that aqua line looks really good. Now, this went a lot higher than I anticipated. This is Friday. This is today. But I said, that's good, and that's where we got out. So you can use your lower time frames for entry is the point, and then look at your higher time frames for a possible target. And I'll go back, and one more thing is that here again, look at the indicator. It was kind of spreading, but the big key was these red and green lines never crossed. It stayed like that. So that was the trend that was going up. When I saw that on Wednesday, because we got in Tuesday, and I saw this going on Wednesday, I said, well, we're going to shoot for the aqua line. Sure enough, it worked out well. Hit the aqua line on Thursday. So 2 days, good trade. I'll go back to the amount. But again, the point is you always use the lower time frame for an entry, and then you check your higher time frames to see if it'll ride that wave, as you say, it'll go higher. And sure enough, this worked out beautifully. So that's great. It was a good trade. It worked out. It doesn't work out that way all the time. You just always want to check your higher time frames for exits. And again, using that 4 hour, we got out at $5.99. It was a nice $1,000 trade. Grains like wheat and soybean, they don't trade as big as dollars per tick, if you will, like bonds and gold and silver and that. But grains are good to trade. They have big accounts. They have very small accounts, micro accounts. You can make a grain trade for $300 or $400 in your account. That's all you need. So anyway, let's review the last trade, which was a one-day trade. This is beautiful. 30-year bonds, they trade for $31 a tick. Got to be a little ballsy to trade that stuff. But they have a 10-year bond and a 5-year bond that you can trade. They move the same way. But again, they're almost like a mini and a micro account. A 5-year bond, you can trade with I think it's about $800 in your account. It trades for like $8 a tick. No, it's not 31, but the theory of it is the same, whether it's a large account or small account. So let's take a quick look at this 30-year bonds and see how well that worked out. One day, $2,000 profit. Who's going to complain about that? I know I'm not. I don't think you would either. And these are all with one standard contract, just like I talk about all the time. Well, I've got some other stuff on here, and I'll explain that. But here was the 30-year bond. And I got to check the dates. I always forget the 7th and the 8th. That's right. Which was Monday and Tuesday. So, yep, here again, you kind of had the spread here. The Monday, it got above the white line right in there on early Monday, and it went up to the aqua line. Okay? So that was a good trade. That was the next day. I mean, here's Monday, you get in, here's Tuesday, and you hit that aqua line. Now, again, this is Friday. You don't have to ignore that, but that wasn't the target. At the time, that was the target, and look at there, beautifully hit before it went back down. So here again, the indicator starts rolling over, and the red line gets under the green line. That's definitely time. That's another rule. That's definitely a time to get out, okay? So that was a nice trade. Went up to the aqua line one day, got in 5 at 171, 173 was the exit, and that was a nice $2,000 profit in one day. So again, exciting. Just shows you how consistent the indicator is. Nothing's perfect. There is no holy grail. Natural gas will show you that, and there's always losers. But look at these trades so far this month. One day, silver's awesome. Takes a lot of money to trade silver on a full account. But look at that profit in silver in one day, $9,000. Look at gold, $5,000 in a day. The silvers pop. I mean, the metals, silver, gold, copper, they all pop the first couple of days of the month. You can see I've got some grains in here with soybean bonds. And the reason why I want to stay on that just for a second, it's when you have these groups, genres, if you will, if the metals are popping, usually they're all popping. If the bonds are popping, usually they're all popping. Same thing with the grains, oil, natural gas, that's oil, crude. It's been pretty quiet so far this month. I've been watching it, but there haven't been any real good trades on it. So that's what you look for. That's what I'm always looking for every day. I look at these every day, a couple of times a day, when I get up in the morning, when I get home in the afternoon, and I'm looking for that trade, that spread indicator to make that turn and have that possibility. And if it doesn't work out, you get out early. Small losses, big gains. That's the key to trading. But anyway, I wanted to kind of review this week with you real quick. Be sure to go to the website, myspreadindicator.com, and get you this information. You can become a member. I can teach you how to trade. I'll give you these alerts. You can become a member for like $99 a month to start with. I'll give you the alerts. You can buy the indicator, and I'll give you all the spreadsheets and work with you one-on-one on how to trade exactly how I do it every day. And believe me, it doesn't take a long time to sit here and do it. All these platforms from these brokers, you can do a set and forget mentality, and you walk away. You have to. You can't sit in front of the computers all the time. Most of us have real jobs that we work all day, so it's something you can check in a few times a day. But you can set these trades up to where I want to trade here, and if I'm losing, I want out here, and if I'm winning, I want out here. You can do that with any brokerage you use. I use TD Ameritrade. And their platform is called Thinkorswim, TOS for acronym. But I've used others, and they all work pretty well. The key is what my indicators are down here. Anyway, just wanted to, again, show you some of this a little bit more live. These green lines here, something else I'll teach you. It's called Fibonacci and Elliott wave. And there's nothing real hard about it, but it's like anything else. You just got to learn what it's doing and how it works. But anyway, I appreciate you listening. I hope that helps, and I hope you consider start trading if you're not. If you are trading, become a member. Jump in. I'll send you alerts, get you free videos ahead of the trade. As soon as this trade would have looked like it, I would have sent you an alert. You got to make your own decision of whether to trade them or not. I can't do that for you, but I'll send you all the opportunities when they come up. Okay? And look at this. This is a corn trade. There's too many lines on there, but this is what I look for in these indicators right here. The tighter that gets, the tighter the yellow and the red and the green get, and then they spread like that. So I call it spread indicator. 9 times out of 10, you're going to see it go up and you're going to win some. And you can see this corn. I didn't even post this corn. I just noticed that. That would have been a winner too when you look at that. You would have got in up here, and this was on Monday. I hadn't even posted this one. This hit the target, early Thursday. It almost hit it here, but it came back down. Scared you, of course. That's what they do. And then it finally hit it. So that would have been another good one. I didn't even post this one. But anyway, everybody have a good week and a good weekend. Check out the website. Sign up. Get some emails. Ask questions, and I'll make videos about your questions. I'm okay with that. And join the members and become a member of the family. But I hope you guys doing well. Have a good weekend. Good luck. I'll see you on the next video.